Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the street. Remember, just a tad day above before the expiry session, we are actually seeing a tepid trade on the D street, still below 24,800 odd mark. It's been slightly choppy as well, but when we look at the India VIX, that's what is really creating some kind of a trouble since morning. But right now, it's down by about 2.5%. So some easing of concerns on the India VIX. It's the PSU banks, media stocks, financial services, Nifty Bank, broader markets like mid and small caps that are still holding up. But it's FMCG, auto, pharma, metals, and IT which are dragging in trade today. There are several pockets and themes and sectors that are still buzzing. Say, for instance, the defense names, the railway names, those are up and about in trade. You're also seeing some gains across the life insurance names like LIC and HDFC Life. Some of the other names within the banking and NBFC space also now pulling up, like Bajaj Finance and ICICI Bank within the large caps that are helping the market stay where they are and probably stem the kind of fall that we had been seeing since morning. Let's welcome our guest on board. Mr. Sharad Avasthi is joining in, Head of Research at SMIFS, now with us. A warm welcome to you, sir. Thank you so much for taking the time out. Good to be having you with us. Tell us what's your fresh perspective on the markets now, sir. Globally, things have been uncertain and probably leading to a directionless move over the last couple of sessions, but largely May series has panned out to be a more comfortable one when we compare the previous series. What's the outlook right now, sir? We are just 1 month away now from that deadline of July 9 when the tariff certainty will be coming in.
Yeah, I think the tariff uncertainty died sooner than I expected. I was expecting it to be a non-event after a period of say 6 months, but already we are talking about the relief rally dying out of tariff normalization.
Yeah.
So it's been a very fast cliff. Now I think it's not so much about tariffs. So now it is a given that it will not be as stark as it was being expected to be earlier, and it was just largely lip service that we are looking at. So from now onwards, I think tariffs are not the main force that you're looking at. Uh, Occasional tweets and media releases here and there will keep happening. That's part of geopolitics. But I think it's a broader strategy to sideline China. That's what they are playing around, and they have repeated the script probably that they did with Japan earlier. So I think in terms of market parlance, I think we continue with the same view that broadly, Q1 should be a standout quarter, wherein consumption should show substantial improvement. That should result in re-rating of the full year numbers as well. Q2 might be a bit lackluster with monsoon and construction activity creating a halt. But other than that, I think Q3 onwards, again, you will see some strong recovery across the board as the festive season demand starts picking up. So I think barring Q2, most of the all the other 4 quarters should be pretty healthy for the current financial year, and that should result in a lot of re-rating. The NBFC headlock that was there, I think that's behind us, and we started this liquidity crunch situation with that. I think there has been some easing. The MSME microfinance, that as a sector is going to ease out. So I think largely when I look at, I don't see credit costs rising. I see advances growing, consumption growing. So that should ideally lead to better numbers, lower interest rates, lower inflation. So I can't see any reason why the market should not be rallying higher. US, yeah, they may not rise more, but equity markets, irrespective of what happens elsewhere, generally most markets move in tandem with each other. So largely, I think it will be a positive market outlook. Not much change in our outlook. I think we'll continue to be ranging higher. Maybe the mid cap, small cap, some parts of it outperform the large cap peers. But that's generally the case, high beta stories. So I think that will keep happening. But across large caps and mid caps, I think we are in for a very strong, maybe 6 to 9 months.
Okay. So it's a defense rally that continues from the last time that we spoke. It's continuing to move up higher with names like BEL, fresh highs, GRSE, shipbuilders at large. We are also seeing a momentum across the board. What we are also given to understand, the defense theme mutual funds have surged up to 60% in the last 3 months as well. So those investing passively are also gaining quite a bit. What's your fresh outlook? Is the question mark on valuation still coming in now after this kind of a rally coming in, sir?
Uh, I think, see, you have to understand it in perspective. Like we spoke about HAL the last time we were speaking. Look at the kind of order book acceleration that has happened day before yesterday or yesterday. Probably BEML had a sharp run up of around 15-16%. Again, the management comes on board and tells you, that the order book can escalate further from here, nearly double or maybe 1.5 times from here. So I think that's the story that's playing across the board. 1.5 years ago, we were maybe discounting, things too much far ahead in the future. But now what we are discounting is the order book correction that happens over the next 12 to 18 months. It might not show up in your numbers, but it will certainly make your next 18 to 24 months beyond that order accretion. That should be a much rosier time that these companies should see. Margin should be good. I think the export opportunity is still not something that we have largely seen converted in most of these cases. So once that starts happening, I think 40 times is not very expensive for these companies. BML usually used to trade at that kind of valuation even before this hype was created around defense. But I think now we can realistically see what is transpiring on the ground. And once I think right now, till now, we are just talking about the domestic opportunities. Even if you look at GRSE, the order flow that was substantial. Uh, a 20,000 order book company gets another 20,000 crore of order. So that's a substantial,
Yeah.
ropeway for them to move further ahead going in the future. So I think execution is something that we will closely watch. But if they can pull up execution over the next, say, 18 to 24 months and the order book accretion, I think that momentum is going to continue. So maybe we are not yet tipped off, peaked off in terms of these rallies. There could be more leg room for them to grow. Expect sharp corrections here and there based on some events like GRSE had one order cancelled in
Yeah.
Bangladesh, all that will happen. But once this big order flows keep coming, you listen to these managements, they are also very confident. And on the shipbuilding side, if the China sidelining continues, I think that could provide further fillip to them. So I'm not very nervous about these valuations. I would not say that they are mouth-watering valuations or trough valuations, but I don't think these are peak valuations, and there is a lot of re-rating capability that's there across defense and shipbuilding.
Okay, so that's as far as the defense names are concerned. How about railways, sir? Are you keeping any watch on the recent bounces that are coming in on the railway space, or still do you think this will not probably translate into a structural move as of now?
Well, again, a similar story, maybe not as pronounced as defense because they have some recent events that are backing them up even stronger. But I think even in railways, we spoke about right now with bull markets, that's the problem that, the movements can happen very fast. So a 200 rupees stock going up by 50, 60 rupees by valuation metrics, it's very hard to justify it after that. But I think for RVNL and probably rights, I think these are the two ideas where there is some international order book fillip that can come in. So maybe these two ideas could perform better than the rest of the pack across railways. But even if you look at something like a Railtel, etc., they have been garnering on the order book. So I think fresh order again flow will be there, but I would just want to if I had to take a bet, I would be concentrated on rights and RVNL because of the possible international fillip that they can get. Rest of it is largely domestic, may happen big time, I think, but I am not very sure about how it is going to transpire. So if I have to bet, I would rather bet on rights and RBNL.
Okay, fair point. Mr. Avasi, how are you looking at these recent big bulk deals, block deals taking place? ITC today, Indigo, PG Electroplast happened yesterday, and we're seeing so many of them line up, and we're seeing so many of promoters' stake sales happening at this point in time. What is it that the retail investors should really look for here, or is this a story that will keep continuing based on fundamentals, and one should ignore what's happening with the stake sales here?
Yeah, I think you have hit the nail on the head that this is something that is going to continue. We have older guys, like the likes of Bats, etc., who could not have imagined that they would be selling their ITC stake in such large chunks in one go in the Indian markets.
Yeah.
And because of a lot of sales of this kind also happen because of business reorganization at the parent level and what their requirements or the way they are looking at various things. So whether they are, demerging parts or whether they want to concentrate on something else. So there are a lot of reasons because of which they sell. So rather than trying to understand their reasoning and their point of selling, I think the focus should be on fundamentals that whether you want to buy ITC at this price or not.
Correct.
And as value at this price, irrespective of who's buying or selling, I think you should be concentrating on what you are doing. Same thing with PG Electroplast, excellent country, excellent company. I think from 30 rupees it has gone up to this level. I remember 2008, 2007, I used to look at it when it was 30 bucks. So it's moved like anything from there after a long time of consolidation. But I think, again, business wise, they've transformed very effectively and now they are looking at a very high growth company. So I think these kind of international pension funds, etc., will keep coming in. So they will keep buying into the. Till now, we were concentrated on the large caps or the frontline mid caps. But I think if the market has to expand, obviously that international buying is also to go down to the lower round stocks also. So I think we will have more and more funds coming in and taking stakes, more institutions coming in and taking stakes. So you largely stick to what is your investment style, what suits your investment kitty, and based on that you take that call rather than focusing too much on what's happening on the institutional side.
Okay, fair point. Also wanted to just get a sense on LIC from you. Today, the FNO space has seen a sharp uptick on LIC post earnings, sir. 945 odd levels that can be seen on the FNO space. That's also pulled up HDFC Life now to the top spot. The life insurance space is again coming buzzing in trade right now, and we're actually looking at what's going to be happening in terms of the policy changes sooner rather than later, I believe, when it comes to cross-selling of policies between life and general. Our things going to be changing. Then there's going to be a government platform that could be launched anytime in the near future. How would you look at all of these factors play up for stocks like LIC and even the private players?
See, I think these changes are most probably welcomed by most of the companies, and I think the composite license, etc., all that is also somewhere down the line going to come in. And LIC, with its vast force on the field, I think they will benefit out of it. Valuations are also most comfortable in LIC as the non-participating, value keeps going up. I think there is a high probability that the way we look at LIC is going to change. We are trading at a discount to embedded value. I am assuming that over the next 1 or 2 years it will trade at 1.5 times embedded value compared to private players who are trading at 3.5 times embedded value. So I think LIC is going to be my top pick. It has been my top pick for quite some time. We are working with initial targets of around 1500, and growth should be stable even today. If you look at the management commentary, what they are talking about is that they might grow at a decent clip. For a large company to grow at that rate, I think that's very decent. You can maintain market share. The initial hiccup in market share as new players come in is okay. Rest of the pack, I think HDFC, etc., might be fairly valued at 750, 800. We were working with targets of around these levels. I believe it's there already. Uh, SBI Life, etc., have also rallied. I think LIC probably is the only life insurance stock that has not rallied, or maybe an ICICI Pru most probably has not rallied anyway. So I think if you want to bet, LIC will remain my best bet. But if you prefer the private side, I think maybe ICICI Pru could be a good name you could look at.
Okay, fair point. So that's the insurance space as well. Also wanted to get a sense, sir, on which are the pockets that you believe that you will concentrate your focus after the Q4 earnings. I think it will be curtains down by next week completely on the earnings front for Q4. Any particular sectors or stocks that you have incrementally built on position post earnings, sir?
Uh, I think we would stick into the front lines names like UPL. The earnings were good. I think further improvement would be visible in the months ahead. And I think even if it trades at somewhere around 20 times, you could be looking at 800 kind of targets. Tata Motors, I'm very bullish. I think the new domestic launches as well as the new JLR launch that could do wonders to the sentiment of the stock. The demerger is happening, and I think even the passenger vehicle and the commercial vehicle space should do good. So I think Tata Motors is one good idea for 950, 1000,
Okay.
15, 16 times forward. So I think that's a good idea to look at. And LIC, as I told you, is something that we are bullish on. We continue to look at. Hero Motocorp looks like a good idea to us. Even Bajaj Auto for that. I think the valuations are comfortable. Bajaj Auto, till now, what we are factoring in does not have too much of upside compared to Hero Motocorp. But Hero Motocorp long term, I think there is very decent upside on that one. So Hero Motocorp. So these are the 3, 4 frontline ideas. On the smaller mid cap kind of names, I think what can you look at? Something like an Accum's Drugs. I think that's a good story to bet
Yeah.
on. and Alembic Pharma is a good story to bet on.
Hmm.
Uh, then something like a popular vehicle, it's a small company, recent IPO, has been thrashed left, right, center. I'd recommended it earlier also, but it's come down from there. So I think that these are good stories you could look at. They could do very well. Craftsman automation could, improve further from these levels. Some of the recent IPOs, something like any costs, etc. I think these are good ideas that you could look at. So right now, there's a whole gamut of ideas you could look at. Some of my earlier recommendations that have not done well, something like a Uniparts that's finally coming into place, an HLE glass coat, basically. So these are good ideas that are good doing. So that on the mid cap side, you could have a much larger basket. But if I have to focus something on valuation, I think paper stocks are something you should look at. Those look very attractive as a basket or as a sector. I think most of them are trading at 48, 9 times. West Coast, TNPL, JK Paper, even the Sheshasai Paper. These could be good ideas you could look at. I think the paper industry is trying to turn around. And there was one basket on the travel and tourism that's improved from the lower levels. But I think long term and Ixigo, TB Tech, Yatra, is my trip. These could be good ideas you could look at. So it's a lot wider basket on the mid cap, small cap space. A lot of improvements can happen. But I think even the large cap space, the same. Kotak's come down a bit. I think that could make a good deal. If you want to take a bit of risk, I want to bet on Indusind also. I think the best upside on the large cap story could be there. Let's see how it plays out. But I think, yeah, there is some risk because it's been very volatile because of news flows. So I think these are the ideas you could largely look at.
Okay, perfect. I mean, if somebody had to really create a portfolio, there are 12 to 15 stocks that Sharadji has just talked about in the last 3 minutes. And if somebody wants like a short term, very, very quick response to, okay, which are the 12, 15 stocks that I could look at across various sectors, he's actually given you a basket of stocks that you could probably look at, well diversified names, so definitely look at that. And maybe that will really help you out in forming your own portfolios there. But you were talking about IPOs, and I wanted to come to that also, Mr. Avasthi. We did talk about both Borana and Bellrise the last time around that you had come. Now, there is a list of more IPOs that have come in. Leela is finally sailed through, cruised after that very tepid start. Aegis Vopak Terminals, Prostam Info Systems, then there is Skoda Tubes that's also open. How would you look at these names, fresh names? Anything that out of these IPOs that strike your attention, sir?
Uh, See, I think there's been a lot of dismal views around Hotel Leela because of whatever reasons I cannot understand. But when I look at it, and if you understand how Brookfield operates, I think Brookfield will continue to hold the management of this company, and their management with respect to real estate and commercial assets has been superior for the last decade or so. So I think this is again going to be a very interesting story. Though within the hotel space, I'm more bullish on something like a Sami Hotels, where I think a lot of improvement can happen over the time. But even Hotel Leela, I think the numbers that I have looked at, I think it's a promising place to be, and a lot of improvements could be seen, once that 450, 460 something inventory that also comes in, and the existing inventory can also see some ramp up. And I think their real estate management abilities are very strong from Brookfield. So I think for this kind of luxury property, a strong management is very important. I think this might surprise many people on the street who are thinking that, it's probably very expensive, or maybe you should bet on an Indian hotels. That's probably better. Indian hotel is a known name, maybe a larger basket of keys also, but I think Hotel Leela is a strong brand, and the management is pretty strong. If you're wanting to bet on the management, I think the institutions should bet more aggressively on a Brookfield management. So I think it could surprise you on the upside. Maybe not on listing day because of too much negative publicity or dull basically response. But beyond that, it could surprise you positively. So Hotel Leela, I'm not as bearish as maybe the street is. And regarding the rest of it, I think. AG Swopak, we have not rated it. We have just made a short note on it. We have no recommendation on it. But the other two, I think the valuations are comfortable for both Prostram as well as Skoda. So I think the valuations are attractive for both companies with the capex etc. going in. I think long-term stories, they seem like good stories to bet on.
Okay, fair point. 9 minutes to go before we shut shop for the day. But seems like we are going to be again having a lower close, about 80 points lower at this point in time, 24,746 on the Nifty. It's the large pockets like FMCG, autos, farmers that have slipped, and also IT contributing to some drag at that point in time. But let's focus on the stocks where all the action is. I wanted to bring in Geo Financial Services up for you, sir. Yesterday we did see the JV getting that approval to launch mutual fund business. This was awaited. They had sent this for approval, I think, last year in October. Finally, the approvals coming through. There is also a talk about how the Aladdin structure could probably come in again in India from BlackRock with Geo Finance and their digital platform. How are you looking at the opportunities that exist for those who still do not have Geo Finance in their portfolios? What should one do?
See, Geo, it is a typical story which you are betting on, a traditional NBFC would need time, to rake up the infrastructure, rake up the deposits. If you look at Ugro as a classic case, in the initial phases, they even found it hard to raise deposits. At times, you find it hard to even lend, even after putting the system, the co-lending agreements, etc., because of a non-strong promoter background. So I think these things change. For Reliance, what happens is Geo comes in with a ready background. The management is strong, credible. So I think co-lending arrangements, this, that will not be very difficult. The brand is strong. So it's a ready business. It will just have to grow. So it might grow faster than a traditional new NBFC. That's the only advantage that Geo has. And when I tell it only, it's not a small advantage. So it's a very big advantage for them. So I think that's the advantage that they have. So fair value that we initially were working with is around 350. What is it that I have not recently seen it? So yeah, so 350 is the fair value that we are looking at initially, considering the type of assets they have on the book and how they liquidate it and transform it into a business. So I think with Geo, that will be your best advantage, that they will scale up maybe much faster than a traditional NBFC. And with Reliance, they have many verticals working parallelly, so that would get a lot of advantage from the apps, telecom, etc., all combined. How it gets funneled is something we need to see. But in terms of valuation, I think 350 is somewhere the fair value. The recent highs were also around those levels. So I think 350 is the fair value. If you want to bet on it, I think initially bet with that in target. And once these things start rolling in and the numbers start showing up, I think then an SOTP will make more sense for Geo. But right now, I think considering the existing book and etc., this is the advantage you're looking at. So if you're holding for 4 5 years, maybe you get to see the benefit of those advantages, because a lot of businesses are still nascent. They have not really transformed into something else. So hold for targets of around 350. I think that's fairly fair value for the stock. Beyond that, I don't see, next 18 24 months that it will go beyond that levels.
Okay. The other key trigger that everybody is noticing is the early onset of monsoon, sir. The earliest onset that we've seen in the last 16 odd years over Kerala, and of course, southwest monsoons, as important as they are for agriculture, we also see it by way of economy and for stock markets, especially the July-August rains. How are you looking at playing this theme, sir? Are you looking at agri, fertilizer names, maybe rural theme as a whole, two-wheelers for that basket? Do you think that makes sense for retail investors to look at today? There are many of those within the fertilizers that are 52-week high, like Deepak Fertilizers as well. Do you think this theme has more legs?
Fertilizer, Shakshi, particularly, I think that's a place that's run up a bit too much. Maybe a jumble has corrected a bit, but across the board, if you look at most fertilizer stocks, they've run up very smartly. And there is some spike in urea prices internationally. So I don't know how it is going to play out. But I think for fertilizers, I'm not very bullish at these prices. I think Deepak is a different case. It has some big capexes, but even considering that, I think at these valuations, it would be largely fairly valued. Paradeep phosphate is something that we have been looking at, but again, there also the rally has been very sharp, so maybe most of the positives are factored in. though it is immune to the urea price problem because of a lot of DAP focus. And they have a lot of capacity, which utilization ramp up can happen and numbers should look much better. So Paradeep could be one idea you could look at, but it's not inexpensive. So I would rather bet on the agrichem side, and as you said, on the two-wheeler side if you want to bet on this story. But this is a 2-3 month kind of phenomena. A lot of flip flop will happen in between. The distribution is uneven. Whether end of that monsoon we have the same thing. But I think largely over the last 2-3 years, what we have seen is that the long term projection deviation to long term projection is not very steep, and we are having steady monsoons. And now most probably the El Nino factor is also dying down, so probably we will have steadier monsoons. So it's good for the economy. I think for fertilizers, etc. At least the working capital requirements don't go up, receivables don't go up. So that's positive. But I think valuation wise, maybe most fertilizer stocks are fairly to fully valued. So it's better to play it through the two-wheeler theme that coincides with the tax advantage also. So I think the two-wheeler theme and the agrichem companies could be good bets to bet on for this.
Okay, and just about a while back, we've also seen the government now hiking the MSP for certain crops like ragi, for bajra, for jawar, and for maize as well. That has been hiked on a year-on-year basis. Some of the flashes will keep coming on your screens as well. Okay, Mr. Avasthi, just 3 minutes to go before the markets shut shop. Do help us understand, what's your outlook on the D Street, on Nifty? How long before we test 26,277, sir?
It's a difficult one. I think over the next 3 to 6 months, I'm expecting means the second half of this calendar year should be very bullish. So most probably will be much higher than that over this period.
Okay, fair point. Well, thank you so much, Mr. Avasthi. Always good to speak to you and get those wonderful insights for our viewers at large. Hope you have a fantastic time. We'll see you soon on another edition, sir, of Market Today. 77 points lower. Viewers, we'll start wrapping up the last 3 minutes of trade now, 24,748. So for a brief moment, we did cross over that 24,800 odd mark, but it was choppiness and volatility that continued to take shape, and we have now slipped towards the low end of the trade today. Almost 80 points of a loss, with FMCG, pharma, auto, consumer durables, metals cracking quite a bit. Although PSU banks continued to rally, and you also had financial services. Nifty Bank continued to pull up towards the end of the session. Media stocks and small caps, I would say, with the rest of the pockets have all slipped. On the Nifty, you have top 5 movers as HDFC Life Insurance, BEL at 390, Bajaj Finance a percent higher at 92.65, Hero Motocorp 0.75% higher, Bharti Airtel also 0.6% up in trade. On the lower end, ITC with that block deal happening, 3% lower. Apollo Hospitals, Indusind Bank, UltraTech and Nestle as those pockets that are dragging. Within the PSU stocks, BHEL, HPCL, IOC, BPCL, those were the ones. So the oil and gas names were up and about in trade today. Insurance names, LIC rallied on the F&O space, the top mover today. CDSL moved up. Indraprastha Gas also moved up. So oil and gas was also clearly the favor. When we look at the top 500 movers, you had Apollo Microsystems with that fresh order coming in, 14 or 15% higher in trade. IFCI Limited 15.6% up. Techno Electric Engineering about 13% higher. Archies Limited about 13% up in trade too. Rico Auto Industries, State Trading Corporation 11% up. Precision Camshafts, auto ancillary names also up and about 11%. Schneider Electric within that same basket 11% higher. You also had names like Unimec Aerospace Manufacturing 10% higher in trade. Defense theme continuing to move up. ITI Limited from the PSU basket 10% higher. InSwift Laboratories, you had Sagel Class, MMTC from the PSU basket. So ITC, MMTC, PSU stocks moving up. You also had names like Banari Aman Spinning Mills from the kind of textile space that also moved up pretty much in trade. So that's as far as how the markets have shut shop. 69 points lower in trade at 24,757. Tomorrow is when we see the expiry session unfold. Will there be more volatility? Will we have to brace up for more choppiness tomorrow? Is something that we will get to know what happens overnight in the US markets and in the Asian markets tomorrow. But most part of the choppiness is already priced in. Let's hope that this passes by soon, and then we can look at the onward move as far as the June series are concerned. All the cues regarding the expiry session will be shared with you tomorrow morning. And of course, how do you play the new series? What are the themes that will work well? Which are the stocks that you need to see rollovers on and probably build on your positions for the June series? Everything will come in tomorrow's morning edition of Market Today. But do stay tuned even now after the market hours, as we will continue to share with you everything that's buzzing on business as well as economics front. Stay tuned.
Good morning, ladies and gentlemen. A very warm welcome to you on Business Today Television. There is a lot of activity on Wednesday